here on time. Good for you. Good to see you, bud. Mountain Mike, Doji. I know Erica Northport got here at like 4:30 in the morning. Not terribly shocking. Timothy, Shale, Calvin. Hope everybody's having a good day. So what are we talking about today? What are we focusing on today? It's the same thing as always, looking for opportunities where we can find it. And I'm going to drop this into this, and we're going to share the correct screen, not the wrong one, the correct one. Very good. All right. So what do we got going on today? Well, again, we're going to talk about momentum. We'll talk about our top trader stories. We will be releasing at 9 o'clock, The Runner. We have a late scratch today. Very interesting. Some change in conditions. So you got to scratch it. Got to get out. Pull back. Pretty exciting. First time we've ever had to do that. And we'll talk about how to react. So again, every day we do this, taking you into 9:30. And if you are not paying attention to what the market is doing from 8:45 to 9:20, you are the exit liquidity of this market, right? This is all about positioning in futures. It's all about understanding that when this market goes open in the first 45 minutes, that's when there's lots of volume, and a lot of the headlines that you are reading right now may end up leading to, well, the purpose of the market is to sell. So a company might have very strong earnings and sell off because of the positioning ahead of time. We'll talk about whether or not this market is safe. Right now, momentum is effectively flat at this point. We'll talk about where money is, smart money is positioning itself. And we'll run through our top screens, breakouts and breakdowns, and of course, give you the runner at 9 o'clock. Right now, momentum, if you forget what this is, every day we assess market conditions on the S&P 500. We take the number of stocks that are breaking out based on predetermined metrics on weekly, monthly, and beta, and we subtract the number of stocks that are breaking down on weekly, monthly, and beta characteristics. 6 minus 2, it gives you a specific number, and when that figure is positive, it's bullish for markets. It's very strong. It means liquidity remains ample. It means the S&P 500 is holding above its 20-day moving average, which is very important. But in addition to this, if the market does start to go the opposite direction, and we do see that figure go negative, we turn to our good friend, the FNGD, which is a leveraged ETN built around FANG debt. And as we can see, we are holding under that 20-day moving average at the moment. We are 5% under the 50-day. And why does this matter? Because leverage is the name of the game in the financial system, and we are making sure that it is the top half of the top 10 stocks in the S&P 500 that are not under pressure. Remember, the weight of the S&P 500 is dominated at the top, roughly 39%, in just a handful of stocks. And if those stocks start to unwind, that leads to a cascading effect across the market. That is what led us to our big sell-off that happened in April, the Nikkei crash that we had last August, the crisis that we had in the short term with the money markets last April, and on and on and on. Nothing good happens above the 50-day moving average on the FNGD. All right, so got 10 minutes. And Bogey's already on top of it. Lisa Cook out at the Fed. Whew, I don't even have enough breadcrumbs to get home on this one. I have some opinions. I'm not going to go too deep into them. But I will just simply note that what you have to figure out, right, there's going to be a lot of outrage over this. There's going to be a lot of chatter about independence in the central bank. Fine. The question is, what do you do? Don't worry about that. Don't worry about the headlines. Don't get political. Don't spend a bunch of time harboring on about what happened in 1913, 1945, 1971, 1993, 2008, 2020. Don't worry about that. Think about what you have to do moving forward. And what does this mean for the central bank moving forward? It's very transparent. It's very obvious what the end goal here is, to get interest rates down. The focus is to get rates down. They're going to let inflation run, and that is going to be, bullish is the wrong term. It's going to benefit real assets, things that actually you could dig your fingers into the dirt. It's going to be in housing. It's going to be in risk assets. The dollar will likely continue to see its continued debasement. Gold will be, it's bullish for gold. It's bullish for silver, and trade accordingly. It's not a political statement. It's just the nature of how everything's going to be. You're going to see Cook gone. Powell's going to be gone next year. And there's going to be a much more accommodative central bank to the political end goals of trying to get rates down, trying to refinance debt. And for now, there is even chatter of just simply refinancing everything in the government with T-bills. If that's the case, the S&P 500 will continue to run much higher. That is leverage in the system. That is capital that is just going to continue to be created through shadow banks. It's going to continue to melt up. Now, I don't know what it's going to look like on the backside. Don't worry about that. Focus on where the S&P 500 is at all given moments. Focus on where we are on the 20-day moving average, right? It is holding above that key line. And I stress this. I know it is an overly simplistic statement to say buy stocks when the S&P 500 is over its 20-day moving average. But the 20-day moving average, what's important about it from a momentum perspective is it takes money to keep it above this line. It takes more inflows to keep it above this line. And that could be a combination of passive investing that's driven by lots and lots of Americans putting money in every 2 weeks through their retirement funds. It can be just the overall bullishness. It can be the increase in leverage. But right now, it took a lot of money to bring us from 538 all the way up to 642. I know that sounds overly simplistic, and I know it kind of sounds stupid, but it's the reality. That's the simplistic thing. I'm trying to bring things down to like the most basic level. What is the most basic way that I can explain how the stock market works? A lot of money going into the equity markets keeps the equity markets elevated over this key momentum line. So for right now, the continued party is going to go on. We're going to act like it's 1999. Fine. But again, if you are worried about what is potentially coming, if you're worried about a potential big sell-off, if you're worried about momentum going negative, that's why I'm here. That's what I do. That's what I focus on. So when I look at this and I say, all right, we had a couple of little blips here, I continue to remind you, we have our momentum indicator and we have the FNGD to help us understand if and when leverage starts to unwind in this system. Okay? So we got you covered for right now. Go outside, throw some champagne in the air, whatever you want to do. All systems still remain go right now for this market. Watch the ES, watch the NQ, the YM, watch the Treasury bonds, and watch the XLF because the banks are benefiting from this stuff. This is bullish for banks, actually. So keep this in mind. XLF, look at all the regionals. They're going to start providing support where they can to the regional banking and the community banking space. It's a good time to be an active trader. What else we got? Mark. So Don volunteered me in a call yesterday to host a recap of NVIDIA earnings tomorrow. So I'll be here from 3 o'clock till we go into earnings. I'm not going to stick around for the call. I think that's at 5:30. But the earnings announcement should be at around 5 minutes after the 4 o'clock hour. So Don has shackled me to this desk. Very excited about that. But we're going to talk about NVIDIA and how to trade that. And as I've noted, as you walk through the current status of affairs with NVIDIA, this is something that we did with our focus on Tesla when we were doing the master class on Tesla. You see all of this chop that's happening right now with NVIDIA. I remind you to go back to TradingView and simply set up volume weighted average price, right? We've seen these swings in NVIDIA where all of a sudden the stock will absolutely take off and you get a $4 or $5 move. Trading the near date option, all you have to do is what you're looking for in this environment is either A, for the NVIDIA to move down to the third or fourth standard deviation, indentured servitude. So you're looking for the stock to come back down here. And if it gets into that fourth standard deviation, that's what Stanley Druckenmiller was talking about back in 2018, that there is no trend. So what happens is you end up seeing algos step in and bid this back up. If anything in the next 2 days, as we lead into this earnings report, if we get down here, buy the in the money call, buy the 175, buy the 176, and look for a reversion heading into Friday, the Friday call, and just day trade that. Now, if you're going to trade this during the day, you can use NVIDIA, but you can also look at NVDL, which is the bullish double bull ETF around NVIDIA. And if you get above this line, blue line, volume weighted average price, trade above that line. Look, 86 will get you 90. And that's a nice little run. It's $4, but you can do a lot if you're using weight and if you're using options and you're trading around these very specific lines. Okay. NVDL, NVDS, NVDA. That's enough NVIDIA for me. Other names that'll trade alongside and things that will react to NVIDIA earnings will be AMD, Taiwan Semiconductor, Microsoft, and of course, Google, SOXX as well. All right, on the energy side, this is where we get the late scratch, everybody. We had a nice little run on energy the last couple of days, and we pulled back. And we have some confidence data, and we have a 2-year treasury auction coming up. But these names that had been bouncing higher, right, coming off this momentum move that we saw, 20, 50, 200-day moving average, effectively PR has stalled out. So this was going to be one of the runners for today. But watching energy the way that it is selling off this morning, there's a lot of geopolitical focus right now. And it's been a very difficult environment to trade energy the last couple of months, right? 170, we're down 1.7% today, 67 on Brent. A lot of chatter about supply risks. It can be very, very difficult to try to navigate a lot of this. And I continue to remind you that the way that I trade energy is I trade it around what's called the OIOU. The OIOU is a leveraged ETN that focuses on upstream oil production. And when it breaks under these moving averages, I turn around and I buy puts on these high beta names like Apache or Permian Resources. Today, pulling back, this has just been sideways all year. And one of the cleanest ways to trade this, and I just want you to just see it so that you know that this is here for when it's time later this year. Pay very close attention to the RSI and the MFI on the OIOU. The OIOU, again, upstream oil and gas, a lot of focus on debt in this arena, a lot of swaps. What you're seeing on the RSI, right? RSI is the relative strength index. That is a price oscillator for momentum, and the MFI is price and volume. And when you get oversold, okay, 70 is overbought on RSI, 30 is oversold on RSI, 80 is overbought on MFI, 20 is oversold on MFI. So when both of these are oversold, what do you see here? Upstream oil and gas. What do you see? This is aligning with broader energy futures trading. So you get to this point where you are now oversold in this market, it becomes the contrarian buy opportunity to the upside. And then when you get overbought, what do you see? This has happened multiple times. It's happening around 2 or 3 times a year. You're constantly looking for these overbought and oversold conditions and to go the contrarian opposite direction. Let's go back and look at December real quick. OIOU going to 24 all the way back up to 36. Look at Apache, APA Corporation. Look at what happened back in December. Same period of time, oversold OIOU. This stock goes from 2050 up to about 2550 in a matter of about 2.5 weeks. If you're using in the money calls out 2 to 3 weeks, you can do very, very well with the contrarian trade around energy. But right now, we're just not there. Apache continuing to ride higher. Looking for this right now as we move into overbought territory. If oil starts to roll over, Apache is going to be a good short for the next 2 to 3 trading days. All right. It's 9 o'clock. Can only mean one thing. What's it mean? Oh, okay. We got the runner. All right, 9 o'clock. We always, every day, we release the runner. It is our market update, expectations for what we're looking for in momentum, stocks breaking out, stocks breaking down, and keeping a very close eye on broad market moves. Okay, so I've already scratched PR, right? As a breakout candidate, right? At 9 a.m., we drop this master list. We talk about liquidity and volatility and everything else that's going on. And sometimes the track conditions get a little different, right? PR continuing to pop just a little bit. I'm looking for this actually to roll over soon. But we'll move into something else, and that's Avalon Bay Communities. Again, with interest rates in focus and with the concerns around the central bank and letting go of Lisa Cook and what's going to happen with Powell, bullish for real estate. Bullish for real estate. So AVB pushing back above that 20-day moving average. You can see the histogram on the MACD, all very positive positive on MFI, positive on RSI, positive move on the ADX. So looking for a continued move here. You got 175 as your next point of potential resistance. And then it's a pretty clear path, hopefully up to that 200-day moving average. On top of this, NSA, which we talked a little bit about. NSA, there we go. National Storage Affiliates Trust. Ugh. Terrible name. Breaking above the 20, breaking above the 50. Pathway, where are we trying to go? Well, we're trying to go where we've gone the last few times, and that is back up to that 200-day moving average, about 30, we're at 34.77 right now. So trying to push back up to that 35 level. ELF to the downside. Elf Beauty, what do you do? All right. Cleanway, 114 down to 107. Buying in the money put, selling out of the money put, and looking for a retest move back down here to that 200-day moving average. Consumer defensives under some pressure. Interesting to see that MFI pushing back above 50. But again, I'm looking for a rollover here, and I'm looking for further weakness if we get under that EMA of 50. On top of this, STRZ. Stars Entertainment. I don't want to short this. Oh, man. I like that pirate show. What was that pirate show? Does anybody remember that on Stars? You posted the RAN. We need the runner. What was the pirate show? Black Sails? That wasn't bad. My wife's making me watch some other terrible Star show right now. It's called like Hightown or something like that. Black Sails. That was a good show. Black Sails. Best show ever. I like that. That is conviction on a Tuesday morning. All right, downside here on Stars. Well, maybe they bring back black sales and the stock goes up 100 to 100. But right now, continued weakness, lower highs, lower lows. Staying in the money, $14 put, maybe $13 put. Have to go out and see what actually is even here to see what we can potentially do here. Let's take a quick look at STRZ. Can we check that? You got the wrong runner. Might have just, yep. Check that, Scott. There we go. He's on it. He's got it, everybody. All right, STRZ. Let's take a look at a spread here. Going to the downside, put spread, Control, Alt, Delete. 16 buy. What can we do? Is there enough here? What an awful options chain. Damn. There's just nothing here. Gonna have to gut it. Can't do anything with it. I'm not, look at that. That's too much slippage for me. And not gonna try to set anything here. But I mean, if you can get that. Nope. Pass. Moving on. Expanse. Okay. What is the best show ever? Okay. I'm going to ask everybody right now. What's the best show ever? And there's one answer. And you better get it right. TAOX. You better get this right. I'm going to be really upset. And it's not Breaking Bad. Don't bring that in my house. TAOX. Don, what's the greatest show ever? And if you say The Shield, I might agree with you. And it's Market Masters. The greatest show ever is Market Masters. All in the Family. See? Look at that. You got it. The opener with Garrett. See? Look at that. Breaking Bad. Get out of my country. Eric knows the answer. TAOX. I don't even know what this company does. I'm not even going to worry about it. Law and Order. Wow. Somebody going to say like the Golden Girls? That'd be awesome. Momentum, energy. All right. So what do we look for on the downside in energy right now? As I said, APA. I like going the other direction on APA right now. The fact that you have this overbought period right here. And you can see what happens when we get into that overbought period. So let's go with Apache today. Let's pull an audible and let's go APA. Yeah, Maud. Wow, you guys have a very eclectic taste. September 2250, right? 21. Okay, the answer's the wire. It's not even a debate. The answer's the wire. It's the wire. Okay? It's the wire. Although the shield was pretty good. We Own the City was very good. All right, so here you go. We're going to go $23 put for September 12th on APA and write the 21 and your stop. And this is what I like about these types of trades. Relatively simple to do. At 22.50 right now, 22.20, you could see you could keep a tight stop here over the next couple of days. If it doesn't break down, if it moves back up to 22.50, you got a 49% probability of profit. You're aiming for 144%. You guys are still going with this. We've moved on. We all agreed. We all agreed it was the wire. Okay? We all agreed. There's evidence. $82 to 118. So shorting APA on the backside of a move to overbought. Again, RSI at 80, MFI at 80. And I like this because as you've seen, let's go back and just take a little bit of a look at history. When we get into these overbought periods on Apache, it becomes an opportunity to go to the downside. All right, so APA, again, for everybody in the back, you are buying the $23 put for September 12th. You were selling the $21 put for September 12th. Probability of profit around 49%. Upside gain is 144%. Break even at 22.18. We are currently at 22.20. That's it. Let it roll. That's our play today. All right, on top of this breaking out, we had seen energy breaking out. Materials and real estate have been obviously doing well as a result of what's happening with Lisa Cook and what's happening with our expectations on the central bank. Breaking down staples and utilities, defensives under some pressure, rotating out of tech and into rate sensitive and financials. And as I've said, this is a very problematic environment as we look at the bond market because, again, short term, the expectations are lower rates, right? Down at that 3.6 level on the 2-year. The long-term, long duration continues to move higher. And that's going to be a problem if we continue to see erosion on the U.S. side, 4.28 right now. If this continues, we could be at 4.5 very quickly, right? Very, very quickly. So we have to be very, very cautious and aware that rising 10-year bonds impacts the collateral, the collateral multiplier that impacts all lending within the repo market and ultimately impacts the leverage in the S&P 500 and all of those FANG stocks that could quickly get under pressure. So we have to keep a very close eye over the next couple of days on this 10-year bond. A couple other things that we want to watch today. CTRA, old friend of mine. Wow, Katera. I haven't seen this stock in a long time, but CTRA, Katera Energy, another name that's going to try to hold above that 20-day moving average. This could roll over relatively quickly and give us a move back to that $23 level. Certainly worth trading if you're trying to go to the downside, just focusing again on the $24 put, selling the 23 and just trying to play it relatively safe. FDP, this is becoming one of my favorite stocks. I don't know why. I don't know if it's what is it about fresh Del Monte produce that I like? Is it the fact that this was a reference to The Simpsons, where the guy who was the broadcaster, he gets he says he's going through his collection of all of his awards, and he says this is the highest award that Del Monte provides. Del Monte fresh produce with that it's the bananas, yeah. Look at that. Look how much fun this woman is having working for Del Monte. She is having a great time. Doesn't that make you want to buy the stock? What I like about this stock, and I keep saying it over and over again, it has a very strong F score. It has a very low gram score. And when this stock breaks above its 20-day moving average, we've seen moves $30 up to 34, 32 up to 35, 33 up to 40. So it's a good little momentum stock, and it's a good little stock to just simply trade. Keep a very tight stop back at that 20-day moving average and only focusing on it when it breaks above these key levels. Keep a tight stop, look for a 5, 10% gain, and then just dump it and wait for the opportunity to come back. Once again, you get into that overbought period. That's where we start to see selling. You wait for the stock to pull back to effectively oversold conditions on the MFI. Becomes a nice little opportunity because, again, the stock is cheap. It's intrinsically cheap, and it becomes a nice little momentum stock when it can break above these moving averages. This is a nice little conservative stock to trade for people who don't have a lot of background in equity markets because, again, the downside is really, really capped because it is trading at such a low multiple, which is called the price to gram rating. Very strong F score, which means high quality. It means that the investors are the executives are doing everything that they should in order to promote shareholder value. And you're just seeing these little tiny moves back and forth, back and forth. All you got to do is just trade the bananas, right? It was the first thing that Blake ever told me. There's always money in the banana stand. All right. How is your favorite stock CCL doing? CCL is just pure momentum. It's not my favorite stock. But CCL is a pure momentum stock. So what you're looking for, Miguel, is, again, don't short the stock unless it breaks under its key moving averages. Trade around the moving averages, set tight stops, trade spreads, and typically if you're trying to go to the downside on this, trade it from the 20-day moving average down to the 50-day moving average. I like Stu. I think I went on a pretty good rant yesterday about STEW. Look at that. Yeah. Warren Buffett, 80 cents on the dollar. All right, what else do we got? Best ad ever. A man from Del Monte. He say yes. Cue oranges leaping off trees. Okay. I have no idea what that is. Mosaic is the last name today. And Mosaic breaking back up. This is a tough one. These are really agricultural inputs. This is a difficult one, but I will say that the catalyst remains the same because the one thing about agriculture that people aren't paying attention to, and I continue to bark about this, there's a meme going around right now about how meat prices continue to rise, and from an agricultural perspective, yes. Water continues to be a problem in Texas that's impacting steers. The herds are relatively smaller than we have seen in the past. And yes, the output is higher. But one of the key things that has to be brought into perspective is the fact that the inputs are going up as well. So when inputs on something go up at the same time that the outputs also go up, that's a sign of money printing. That's not a sign of inflation due to just simply the supply side elements. There is a certain impact here on the monetary side that continues to impact these names. And as we look at Mosaic, I think that there is a very good bull case here. You continue to look at this and see that you have positive move on the MACD, positive move on the MFI. We can hold above that 20-day moving average. You're going to see some resistance at around that $34 level. But again, you're looking for a clear move back up to 38. If you're trading this, tight stops, very tight stops. Buy here, sell here. Buy here, sell up here. But if we drop back under that moving average, you're not going to move back into this until we retest that 200-day moving average. All right, lack of luck will squeeze many agriculture product prices. Sure. Would I still buy ET today? Yes. But I walked you through this yesterday. And I told you that you didn't have to buy the stock. You could sell a spread on this. So ET, which, again, my favorite pipeline company, Kelsey Warren continuing to buy his stock at $17.50. Let me show you what you can do with this, okay, Eddie? Because instead of buying the stock, what you can do is pick a price that you would want to own it at. So let's go out to January, and let's look at selling the $16 put and buying the $14 put. So again, keep this in mind. Stock's at $17.50 right now. If you write a $16 put, you are giving someone else the right but not the obligation to sell you the stock if it hits 16 or less on or before that strike date. And by buying the $14 put, you are ensuring that you don't need to put up all of the margin associated with what selling a traditional put would be. Right? Now, again, the stock is paying 7.5% yield. But watch what happens when you do this. You're putting up $176 to make 24. That's 13.6%. And your probability of profit is 84.4. Okay, so what do you see here? What you see is nearly double the yield on a trade like this. Your break even is 1576. So you're not buying it at 1750. You have the possibility to buy it at 1576, which, by the way, the yield would be much higher at that point, probably be around 8.1%. But you can, instead of buying the stock, right, buying 1,000 shares right now at $17,500, you could sell 10 of these contracts at $1,760 to make $240, which, by the way, is a little bit better than what you would be making on the yield with the stock. So using what the market is giving you, focusing on stocks that you want to own, building trades that have double-digit returns and 80% probability of profit. If you got to sign the stock at 1576, I'm taking it all day, right? Because as we have seen, yes, there are these sell-offs that transpire. We had this happen in April, right? You had this move down to 1533. That's your worst case scenario. That's end of the world. This is where Jim Cramer's crying about the next Great Depression. And then they stepped in and provided support to the market. You don't have to buy the stock. You can trade options and have a nice spread that can deliver relatively great gains on the backside of this. And if you look at this, you go out to maybe March, right? You can get even more creative with this if you wanted to. You're going to have to lock up some capital for some time, but you know, the 15-13 spread, what does that deliver? 90% probability of profit, and you're going to lock up $178, but there's your 12.4%. And I'm telling you, you're buying this stock all day, every day at $14.78. I don't even know what would have to happen for that stock to be at that level. That's a big problem happening in the US economy. And you're going to back up the truck and buy the stock anyway at those levels. Okay? So January 16th is one option. You got March. If you went out to January and you did the I don't know, let's just look at, even if you did the 16-15, right? Even if you just did 16-15, that's clean too, because once again, that's a higher yield, 20%, 84% probability of profit, break even at 1584, and you can leverage that up a little bit more as well. So again, writing the 16, buying the 15, or writing the 16, buying the 14 for protection. And again, the thing that's important to note about this, when you do a cash secure put, let me show you how much money you would have to put up in order to sell this put going out into January at 16. You're going to have to put down $1,564 just to make 36. Use the spread instead. Back to show. All right. Yeah, thank you, Secret Agent Charlie. I appreciate it. You're talking about the things that really matter. All right, everybody. It's 9:20. Don's coming up. I'll be back here at 3 o'clock. And again, on Friday, we're going to be doing this at the bar. I'll show you the still, my family bar, and we'll hang out from 3 o'clock to 4 o'clock. In addition to that, we've got a couple things coming up. Make sure you click the link. We will be very active tomorrow. I'll be back tomorrow for the NVIDIA earnings as well. I hope you guys have a great trading day. And what else? I can't. I literally, you broke my brain, Charlie. I apologize. Yeah, I'm going to go the wire one and then 40 miles of dirt. I hope you guys have a great day. I'll talk to you soon.